Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top percentage gainers in the day. It was a huge down day for the markets. Yeah, just a really bad start to the second quarter. If you're a bull, things just got totally hammered all the way across the board. It was a sector-wide sell-off. It wasn't just technology stocks, it was everything was sold off today. And as you can see here, we're taking a look at the futures, and they're currently up. As you can see, Dow Jones, it was just up over 100 points in futures trading tonight. It looks like the markets are setting up for a potential bounce tomorrow. As you can see, the Nasdaq, the S&P 500, the Russell 2000, they're all up above the closing price for the indices for the first trading day of this quarter. And so we'll see if tomorrow they can get a bounce going. As you can see, the Nikkei is bouncing here. The market's open right now, and it's currently up 130 points. So yeah, and then we also have over here, we have VIX after being up there at 23. If you caught the video from yesterday, I was mentioning that 23 is a big level to break. As you can see on this chart, that there is a gap on right about at the 23 level here. And so, above 23, it could possibly run up to 25 and fill that gap. But right now, it's forming a red candle here in futures trading. So we'll see if it can bust through this 23 level, or if it's going to come back down and test 20. So today, the big thing was futures trading. Futures trading was or not futures trading, but volatility was the big trade today. It was a huge spike in volatility. We had TVIX, UVXY, VXX. They were all moving today. And if you look here at UVXY, this is the ProShares Ultra VIX short term futures ETF, and it did close up 13% today. This was a really strong move. It was temporarily over it was temporarily trading over the 200-day simple moving average, currently at 21.17 intraday today, but it did pull back and it closed, well, actually it closed just at that level, just slightly above at 21.18. Okay, so going through tomorrow, it needs to stay above that 200-day simple moving average. If it pulls back below, it could signal some consolidation. That is the big resistance level to break. It's also hitting this closing price here on the 12th and 13th of February. Okay, so this has been the big resistance level. Can it bust through this 21 zone, or is it going to come back down and test 20? Currently, EMAs 4 and 8 are holding. As long as the EMA 8 and 19 support is holding, this chart is super strong. If you do see it drop below 19, that's where it could pull back and test that middle Bollinger Band. It's in that 17 support zone. As long as the middle Bollinger Band and 50-day simple moving average are holding like they did back here, on the pullback, the uptrend is still intact. It's just this 200-day simple moving average is the same level that UVXY topped out at in the February run. And so the question now is volatility going to break out and make that run up to those February highs and turn that 200-day simple moving average into support, or is this going to signal a temporary top? So we'll just have to follow the charts. If you look at the 15-minute chart here for UVXY, you can see it did close below the middle Bollinger Band at 21.43. It needs to get back above that level. And then now with futures trading being down another 32 cents tonight, you're looking at a gap down open situation tomorrow. And so the close below the middle Bollinger Band was your signal to lock in gains if you're following our technical analysis. And currently the big level to hold tomorrow is going to be down here at this 50 and 100 simple moving average support level. It needs to hold 20. You could see a gap down. This is just, anything could happen between now and the market open tomorrow. The market could open 100 points down. It's been so volatile, who knows? Just making the video right now, it's showing the futures trading is up and VIX is down. And so if there is a gap down, what you want to see is this low close from today at 12:30 hold, which is right around 20.50. And if that broke, then the 20 level would be on deck. It did drop back below the high close from the 28th, and that was the big support level. If it fails to get back above 21.50, that's going to be a red flag that it could consolidate. Now look at TVIX, huge move today. This is the 2 times VIX short-term ETN. And you could see it closed up nearly 19%. This does not trade options. People this is giving you 2 times though, so it's giving you more bang for your buck if you're on the right side of the trade, but it can also work against you if you're on the wrong side of the trade. It had the same. It failed to break that same technical level today. Notice how over here in the first week of February, when it was topping out, it kept hitting the red line. That is the 200-day simple moving average currently at 1140. It needs to break that level to head higher. Notice how last week it hit that level and pulled back, and then today it closed back below that level as well. It's also struggling with this closing price here in February. Okay, from the 9th of February, it needs to break that level and break the 200-day simple moving average. If you see TVIX trading above 1150, 1115 above, and closes above that level, that would be really bullish, and we'd be looking for a run up to 1350. If 1150 turns into resistance and you see a gap down tomorrow and it pulls back below this descending resistance line, notice how it closed above the descending resistance today. If it gets back below that level, you could see EMA 8 at 986 tested. Now that's been holding during this really strong uptrend the last couple of weeks. If that breaks, you could see it drop down to test that middle Bollinger Band and 50-day simple moving average. Now a close above the 200-day simple moving average would be very bullish for volatility, but it would signal downside risk for the markets. Notice the big volume. So there's been really big volume behind the move here, similar to that February move. A lot of green volume bars there. Notice that there's more volume on the up days, okay, than on the down days. So that's a signal that people have been loading. If you look at the TVIX 15-minute chart, you can see here that it was trying to break that 1115 closing price, and it did get above. Okay, this is a chart that I had posted earlier in the day in our chat. Please come check out our chat. I'd really appreciate it. Yeah, it got back above that level and it hit the 12 resistance zone where it failed to break and it pulled back. It did close below that middle Bollinger Band. That was a red flag in the close. Pulling back below the top level, the high close from the 28th, and then you could see it struggled with that level, then it broke above. Now that it's back below, that 1150 is just a huge level to break. It needs to get it back above the middle Bollinger Band at 1140. If that's resistance tomorrow, you could see a pullback, and the next big support level is going to be way down here. If it gets past the lower Bollinger Band at 1076, you're looking at the 50 and 100 simple moving averages down here around 1040 as the next big support level. Notice it did close on a big volume spike. It looks like people were locking in some gains into the close, and then and so let's take a look now at some of the stocks that we're running. In this video, I'm going to be focusing on the small caps. Many times they are not as affected by the market movement as the large caps. If the indices are down, many times you can find some small caps that are still running. SLS was what we call the average low average daily volume runner. Okay, so on an average daily volume basis, it has extremely low volume, but today it did trade over 17 million shares and it did close up 150%. Now you have RSI up here at 75. This stock rarely gets this high on RSI, so that is a red flag. Notice that every time it gets up to this 80 zone on Fasto, that signals a temporary top. And so, this stock, since it rarely, it's been in a strong downtrend and it rarely has volume, most of the time spikes are sold off. Okay, so you can see here in this multi-month downward channel, today it did break out above the top of the channel. That's this red descending resistance line. Okay, so the break above that and the 100-day simple moving average, the gold line at 689, was very bullish. It needs to stay above both of those levels. Okay, it's currently hitting this resistance from November. You can see there was a lot of consolidation between this 850 and 950 level. Okay, so it closed right below that channel. It's in this other, it's hitting this other resistance from December. You can see December had another channel. And so anytime that you have a lot of trading within a certain range, it becomes a very difficult resistance level to break when tested, and so it's going to need to bust through that and then get back above this 200-day simple moving average at the $10 resistance zone. Notice it traded above that intraday and then pulled back. That was a signal to lock in gains. I mean, since SLS has super low average daily volume, look at the volume bars down here. You have to be looking to lock in gains on the big volume day. It's just the safer way to trade. Now this can continue running, and the only way that it's going to be able to do that is if it busts through the 9s here and then closes back above that 10 resistance zone, gets it back above the 200-day simple moving average. If it did close above that, we'd be talking about the 300-day simple moving average up here at 14 is the next target. If this $9 and $10 resistance zone, turns into resistance and it drops below 8, it has to hold that 100-day simple moving average at 689. You do not want to see it if you're a bull dropping back into this previous channel. That would signal more downside risk. The risk is there's a huge gap down here between high of day on Thursday and low of day today. So the risk is if it came down and dropped below this green line, the 50-day simple moving average at 541, that gap below could fill. Now, if you look at the 15-minute chart for SLS, you can see all the magic happened in the beginning of the day. It did form that candle that looked like they were doing some heavy profit taking, but they were able to push it higher, and then it climaxed out here at 11 o'clock. Notice how the volume really drops off after 11. Okay. Also, notice how here at 1:30 it fails to make get back to that previous high. Not only did it fail to make a higher high, it failed to even reach the previous high. That was a sign of weakness. It has to break this red descending resistance line at 950 and the middle Bollinger Band at 889 to heat up. If those levels turn into resistance, you're going to see this $8 level tested. Now, a break below 8 would signal big downside risk. You could see it drop all the way down to the 50 simple moving average, which is currently at 614. The only support that you're going to have in between is going to be in between these two candles here at about 715. So that's the big downside risk. If 8 breaks, you could get a big haircut down to $6. So yeah, that's always the risk about holding stocks that are thinly traded. The problem is once the volume dries up, it's going to be very difficult to sell, and it's much easier to sell on the way up than on the way down. So keep that in mind. Okay, so OREX, check it out. It closed up 62% today. This was a nice bounce. It had a good follow through from last week. If you look down here, it had been trying last week, going into the close to get a close above the pink line. It kept head faking us. We were looking at it back here on the 21st. When it broke intraday, but it failed to get above. We were looking at it again on the 28th and the 29th, and each day, actually on the 29th, it closed just above, right above that level. So that was a signal that it was heating up, but this was all a clue that it was finding support. And then today was the payoff day. It finally broke above EMAs 4 and 8. It needs to hold above both of those levels. It's got to stay above 27. If you see it drop below that level, that would be a red flag. Now, it was above this EMA 4 or EMA 13, the orange line intraday. It pulled back and closed right at that level. It needs to stay above 34, and then you could see a run to the bottom of the gap at 45. Keep in mind the bottom of the gap is always a big resistance level to break. If it does get above that, the middle Bollinger Band at 52 will be the next target. Okay, yeah, and look at that huge volume behind the move today. So giant volume, 15 million shares. Look at the bull cross on the 12.26 and 9, and then you had a MACD bull cross on the 8.13 and 5. So the chart's really heating up. This is a dead cat bounce play, so you have to be careful. It dropped for a reason, but it is signaling that it could follow through tomorrow with some more upside. And this is a bullish move when the stock market was under immense pressure today. Now it did form this temporary top here intraday, where it hit a top, pulled back, hit it again. So it needs to break this 35.50 resistance zone. It did get back above the middle Bollinger Band on the close. That was a strong close on a big white candle. It closed. It has to stay above 32 and then break this 35 to 36 resistance zone. If you see it trading up there in 36 and above tomorrow, that's going to be your clear signal. Okay, OREX is falling through and the 40s are headed up. The 40s are going to be on deck. And then if you see it drop below 32, that's going to be your red flag. Okay, it looks like it's not happening. It's consolidating, and that's when you could see that 50 simple moving average at 27 tested. Okay, let's look at SSC. So yeah, this was one that we alerted when it was first starting, and it's just been following through even with the markets under immense pressure. This closed up another 22% today. This was a huge move. This is a blockchain cryptocurrency related stock, so we have it as a crypto stock. It is at 61 in RSI, so there is more room to run until that overbought level. You do have Fasto now up at 91, so it is signaling temporarily overbought, but in the more medium term, there is more room here. It's not overbought on RSI. There's still juice in that tank. It's been heating up. We put out alerts 2 weeks ago when it closed above the middle Bollinger Band. Okay, I posted charts on this black candle right here, and I said, you know, as long as this middle Bollinger Band down here holds, then it could start a new uptrend. And that's exactly what's happened. You know, sometimes it just takes a little bit of patience. You know, stocks don't always just get running right away. You know, if you're a good chartist and you spot a change in trend, sometimes, you know, the curse of you know, being good at charting is that you get in a little too early before the play fully develops. And that's kind of what happened here, where it just needed some more time to keep pushing higher. It did hit that 200 and 300-day simple moving averages and pulled back, but when it did, it held this EMA's 4 and 8 support zone, and then today it finally closed back above those levels, and it's right at that 50-day simple moving average at 259. It closed just above, so if it can stay above 259, above that 50-day simple moving average, we're looking for a run up here to the 100-day simple moving average at $3. That's the top moving average on this chart. Okay, so once SSC is trading above that 100-day simple moving average and it turns into support, the chart is super bullish. I mean, it's really, you know, it's really heating up here. SSC has started a new uptrend. It's trading above the middle Bollinger Band, which is the 20-day simple moving average. It's trading above the EMA's 4, 8, and 13. It's trading above the 200 and 300-day simple moving average, and it also closed above the 50-day simple moving average. All right, so the candles did close above that upper Bollinger Band today. The last time it did that on this candle, it did work back into the bands. It has to hold the 200 and 300-day simple moving average. If it were to close below those levels, that would signal that it's not ready to head higher. And then, yeah, I just want to show you there is a gap on the chart, and so look for a gap fill. Many times a gap fill could be a temporary climax. So if it runs up to 280 here, that would fill the gap, and it could hit some resistance before hitting that $3 level. So keep an eye out for a gap fill. Notice that it has the nice volume spike, and then also notice how the green volume bars are you know, the up days are where all the volume's at. Okay, so you have the you know, the big volume is on these white candles pushing higher. Okay, so that's your clue that they're loading. Right, so they've been filling. You know, it's heading higher, and they're loading on the way up. You know, you're getting higher highs on each of these green volume bars, even though they are getting smaller on the way up. It is a good sign that people have been loading. Okay, if you look at SSC here on the 15-minute chart, I mean, this was a really strong close for a market that was under intense pressure today, and you know, being down 700% and having this close up 22% was impressive. I mean, look at the volume that came in here. Big volume came in, they sold it off, but it held support like a champ. There were buyers today. They bought it and they drove it back up into the close, you know, with this nearly 90,000 shares traded on the close for this thinly traded stock. You can see now the big level to break is this closing price here at what is this, 12.15. If it can get above this 260, 250 resistance zone, that's going to signal that it wants to head higher. If it struggles with these 260s, then it could pull back and test that middle Bollinger Band. As long as the middle Bollinger Band at 248 is holding, that uptrend is still intact. Okay, let's look at BLFS. Okay, this closed up over 20% today. This was a very nice move. Notice how you've got RSI at 67, and in the past, it's been able to get above 70 on RSI. So this has potential to push higher. It is frothy on Fasto at 97, so it is signaling temporarily overbought. It pushed today above that upper Bollinger Band on a big volume spike. Check out the volume bars down here. This is a chart I posted earlier in the chat. I mean, if you like my charts and technical analysis in the videos, I think you'd find the chat beneficial. You know, it only costs 50 cents to 66 cents a day, depending on your what subscription you sign up for, and you know, you get charts like this all throughout the days. I guarantee you, I will give you your 50 to 60 cents worth of information every day. If you're unhappy with the 60 or 50 cents that you're paying on a daily basis, I will gladly you know, refund your money. Okay, so because I work really hard every day to put out good information, and I feel at these very, very cheap rates that what's 50 cents, right? I mean, I give that to the homeless guy every time I go to the freaking gas station. And yeah, and so here we've got this big volume spike right here into the close, and you've got this move here above the high close resistance from March, and so that close above that level was bullish. It needs to stay above 6 now. If it dropped back below 6, that would be a red flag, and you could see it pull back into this previous pattern. It had this descending triangle pattern. You can see descending resistance, right? And so you have descending resistance, and it broke above that red line today. That was a good sign. And then you have horizontal support, right? So you have this support off of this horizontal line, and so that whenever you have a descending triangle pattern and then it breaks above, many times that signals it wants to head higher. You know that it did not do that. It was a head fake in early March, so we're going to see if it can stay above 6 and actually follow through this time. The downside risk is there's an unfilled gap between high of day on Thursday and low of day today. So if it did pull back below 6, it could possibly pull back and fill that gap. That is the downside risk. To the upside, you want to see this high close from December break, this 640 resistance zone. A break above that would put this $7 zone in the high close from October back on deck. Okay, look at it. Take a look at NSPR. Closed up 15% today. This stock's a total piece of junk. It has a really nasty downtrend going. You know, it got below the middle Bollinger Band. It's failed to get back above. You know, it failed again here on both of these black candles, and it keeps dropping. And now it hit that dollar level on Thursday of last week. And then check out the big volume down here. You know, it had some. You know, just keep an eye on it. The candles are below the lower Bollinger Bands. So notice how today's candle formed completely below this candle, this white candle. It has formed completely below this purple line right here, and that purple line is the lower Bollinger Band. When you get a candle that forms completely below, many times they work back in the bands, similar to the candle on Thursday. That formed completely below. It's finding support and working back into the bands. So the upside potential on this type of play is a move up to EMA 4 at 142, which really isn't that bad of percentage gains from here for a short trade. But you know, it could run up to that EMA 4 and test that level and top out. You know, keep in mind that is coming down. If it did break above EMA 4, what you're looking for is that there's this gap up here. I guess there's a couple of gaps in this chart. There's a gap between high of day on this candle and low of day. There's a gap between high of day on this candle and low of day on this candle, and there's a gap between low of day on this candle and high of day on this candle. So what you could possibly see if this did bounce and then it got above EMA 4 is a run up to EMA 8 and the bottom of the gap. So keep an eye on NSPR. If you look at what makes it interesting is it got above this green line into the close. Notice how it has really tight Bollinger Bands. The purple line here is the upper Bollinger Band, and the purple line here is the lower Bollinger Band. And when they get really tight like this, notice how tight they were right here. And you know, many times that signals a move is coming, and it looks like it's trying to break out to the upside. It's above the middle Bollinger Band. As long as that 112 level holds, it's in play. And then it closed above that 50 simple moving average at 114. That was the move that we've been looking for. So now that it's above that level, notice that the last time it was above that level was when it was, you know, still in when I tried to get an uptrend going over here. And so since this downtrend's happened in the last few days, this is the first time it's been back above that level. So if it can stay above 114, it's in play. It broke also above the top of this channel, and then it has this tight channel right here to break. If it can get above that, you have the 130 zone on deck, and then what you'd be looking for is a run back up to that 100 simple moving average at 154, and then the bottom of the gap at 170. Those are the big levels to break above. So keep an eye on NSPR. Take a look at HEB. Okay, this closed up nearly 19% today. This is a stock that we've been following. It had multiple red candles in a row leading to Thursday's close. So check out all these red candles here. It looks like a bullish, either one white soldier or bullish kicking pattern formed today. So you've got the reversal pattern on a big volume spike. Check out how it was the largest volume since back here in January. So you've got since January back here. So that's a good sign. The big thing now is to break these two levels. It needs to break the 50-day simple moving average basically at 48, the green line, and then the red line here that's lined up with 49. That's the descending resistance line. Okay, so if it can get above 49 and close above both the 50-day simple moving average and descending resistance, that would be really bullish, and we'd be looking for a run up to 55. Now, this is a huge resistance zone. It did close back above the middle Bollinger Band at 46 and above the 300-day simple moving average at 456. And so if it can stay above both those levels, that would be bullish. If you see it drop back below the 45 or lower, that's going to be a red flag, signaling it's not ready to go. If it gets above 48 and 49, that's going to be a signal that HEB is still in play. Okay, take a look and could possibly get a new uptrend going. Take a look at AEMD, closed up 17% today on light volume, 600,000 shares. It made a really strong move. This is a good move for the stock. It had this good uptrend going over here, and then it pulled back You know, it broke middle Bollinger Band support 2 weeks ago, and then it found support last week down here around 115, and then today it closed back above EMAs 4, 8, and 13, and above the 100-day simple moving average at 130. It needs to stay above that 130 level. If it dropped back below 130, it would no longer be in play. To the upside, it's hitting 3 key levels: the middle Bollinger Band, which is the 20-day simple moving average, and the 50 and 200-day simple moving averages. If AEMD closes back above 50, that would be a really bullish signal that, okay, yeah, it's trying to get a new uptrend going, and then it would have to stay above those levels, and then we'd be talking about a run back up to 190 and up to this 300-day simple moving average at 198. If it fails to get above 150, you know, it definitely fails to get above 140 or drops below 130, that would be a red flag. And if it fails to get above 150, that would signal it's not ready to go. Okay, take a look at ALNA. This has been a really strong chart, but I think it could be cooling down here soon. Congrats to everybody that's been trading this. This is one of those thinly traded runners. It closed up 19% today on 240,000 shares. But check out this chart. I mean, the market's been hammered, but look at this thing. I mean, they just walked this all the way up for a nice, you know, 100% gain after it got above the middle Bollinger Band down here at 7. You know, it hit 14 today. So you've got a 100% gain in the last couple of weeks on a really light volume walk up. Look at all those green volume bars in a row. It doesn't trade options, so in that could be wrong. But yeah, you know, this is where you'd be looking at you know, puts coming up here, because this has got to take a breather here soon. And so yeah, if you look down here, what is that? 4, 5, 6. It's like 12 days up in a row or something. And so today the red flag is that there was a gap up open. So there's a gap between high of day on Thursday and low of day today. And so if it did cool down and fail to break resistance here, what you'd be looking for is a drop down to 11 to fill that gap. Okay, EMA 4, the pink line, currently at 1138, has been holding the entire time during this run since down here in March, once the middle Bollinger Band was confirmed support. And so if you see a close below that level, that'll be your clear signal that it's a bearish change in trend and that the chart's finally cooling down. A red flag also is the upper wick on today's candle. Okay, so that does show profit taking, and you can see it's hitting the resistance from over here. It came up and it hit the bottom of this sideways channel. I told you before how, you know, when candles consolidate in the zone and you come up and hit that level, it becomes tough resistance. And now it's also hitting, you know, where it had the high close over here in November, and where it dropped back here in December. And so basically, if it fails to get above this 13 to 14 resistance zone, it's going to signal downside risk. And if it gets above this 14 level, you know, I think it would likely top out at 15. I mean, look at all the candles that got hit at 15. It would at least take a temporary breather after all these candles in a row. It could take a breather now and not hit that level, okay? And if it does, look for a drop down to 11 to fill that gap. If you look at ALNA on the 15-minute chart, you could see that really strong uptrend. Notice how they really poured on the volume here today. So many times when you have the big volume at the top, you know, that's people locking in gains. You know, big money loads at the bottom, and then they sell at the top. And so it has to happen here to head higher. It has to make a new high close. And so if it fails to get above this 1330 resistance zone, that'll be your clear signal that it's not ready to head higher. So tomorrow, if ALNA is below 1330, that's going to signal risk. Above 1330 signals that it could head to 14, possibly test that 15 level. Now, if it drops below 13, that's where it could get dicey after all these candles up in a row. And if it dropped below 1250, then you're looking at a drop down to 1188 to test that 50 simple moving average, because when the middle Bollinger Band breaks, they always drop to that 50 simple moving average. That's the next support level on the 15-minute chart. And so what you have is you'd be testing the top of the gap. Okay, so that's the top of the gap, and high of day on the 29th is the bottom of the gap. And so the downside risk is it drops down to this 11 zone that I was talking about before, where the 100 simple moving averages and fills that gap. Okay, keep an eye on CYCC, super low volume, only 390,000 shares traded today, but it did close up 9%. It is trying, sorry, that's the, you know, it's a college championship basketball game on right now. Got it on pause though. Yeah, as you can see here, it's trying to bounce. and it's hitting that middle Bollinger Band currently at 149, and so it has to get above that level and turn it into support. As you can see in March, it struggled mightily to turn that level into support. It was a pain in the butt if anybody tried to load here and hold. You know, you just got totally worked and they pulled it back. So this isn't the best kind of setup. You know, just keep an eye on it though. It could possibly heat up if it got above that middle Bollinger Band and then got above the 50-day simple moving average and then got above the 100-day simple moving average. There's not bad percentage gains, you know, 20 cents between the current level and that 100-day simple moving average. Notice that's where it topped out at before. Now things could get interesting if it closed above the 100-day simple moving average and then actually turned it into support, and that's when you could see a run up to that $2 level and test that 200-day simple moving average. Okay, now here's a little update for UAVS. This used to be ticker symbol ENRJ, and they merged with UAVS here, and now that's the new ticker symbol. And so it did close up 9% today. It is trying to bounce, so it did get the bounce today. It closed right at the 50-day simple moving average at 476, so it has to break that level to head higher. If it can get above that level and then get above the middle Bollinger Band and the 100-day simple moving average at 454, you know, it could heat up again. It has a lot of work to do. It has to get above the 200-day simple moving average at 650 and the 300-day simple moving average at 763. We'll just keep an eye on it tomorrow to see if it can follow through. If it fails to get above that 475 resistance zone, that's going to signal downside risk. It's at the threat right now of starting a new downtrend, and so you know, if that 50-day simple moving average resistance level fails to break, you know, it could continue to consolidate. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. I'll post the link below the YouTube video. Thank you.